Welcome back to The Explainer, folks. Today, we're diving into a highly lucrative, rapidly modernizing business that you probably thought was just about garbage collection. Yep, we're talking about waste management. When you see those iconic green and gold trucks rolling through your neighborhood, it's super easy to dismiss them as just a basic traditional service. But behind the scenes, WM is pulling off one of the most fascinating industrial pivots in the entire market today. We're going to tear into the data, the financials, and the internal metrics to see exactly how they're pulling this off.
So, let's kick things off with the literal billion-dollar question. How exactly is WM transforming everyday landfill gas into a total powerhouse for the circular economy? We aren't just talking about picking up your recycling bins anymore. We're looking at a company that is actively capturing the emissions from our garbage and turning it into the exact same fuel that powers their business. It's a completely closed-loop system, and it is fundamentally changing both their cost structure and their environmental footprint.
Just how serious are they about this? Well, try at $1.2 billion serious. That massive number is WM's projected investment in its renewable energy business between 2022 and 2025 alone. They aren't just dipping their toes in the water here, they are completely redefining their operational moat. By pouring this level of capital into renewable natural gas, they're essentially securing their very own energy supply chain for the future.
Here is our roadmap for today. We'll hit the green fleet evolution, dig into their financial health and cash flow, look at ESG and workforce metrics, do a peer comparison and valuation, and wrap it all up with risks and insider activity.
All right, part one, the green fleet evolution. Powering up with trash.
To really get their operational strategy, you have to look at this brilliant shift away from heavy diesel reliance. Decades ago, they were experimenting with liquefied natural gas in California. Now, over 70% of their massive fleet runs on compressed or renewable natural gas. And here's the kicker. Over half of that is produced straight from biogas created at their own landfills. By 2026, they project they'll have the capacity to power their entire natural gas fleet entirely with their own renewable gas.
Now, you're probably wondering, what about going fully electric? Well, they're testing EVs for sure, but management is being super realistic about the heavy-duty electric transition. As COO John Morris pointed out regarding battery electric vehicles, hard to say on the heavy-duty side. That's probably the one answer we don't have a lot of clarity on yet. And that makes total sense. Think about the massive logistical nightmare of trying to charge hundreds of giant garbage trucks at a single depot overnight. So while they are testing single-platform EVs, they're really viewing hybrid vehicles as a practical bridge.
The big takeaway here is that WM is absolutely not sitting around waiting for the EV revolution to figure things out. They already have massive alternative energy infrastructure up and running today. Look at this, 11 renewable natural gas facilities, 65 landfill gas to electricity plants, over 200 fueling stations, and upwards of 12,000 alternative fuel vehicles operating right now. They've essentially built their own parallel energy infrastructure, and it's giving them a massive economic advantage.
Moving on to part two, financial health and cash flow. Let's look at the payoff of all this sustainability.
Check out this steady, undeniable climb in adjusted operating EBITDA. We're going from roughly $5.9 billion in 2023, stepping up to over $6.5 billion in 2024, and projecting a massive $7.58 billion by 2025. This isn't just top-line revenue growth. We're talking about expanding profitability. Their adjusted operating EBITDA margin actually pushed up past 30% in 2025. Those massive tech and fleet investments we just talked about, they're translating directly into significantly thicker margins.
And man, the first quarter of 2026 just proved they are an absolute cash-generating machine. Thanks to some really aggressive cost management, they nearly doubled their free cash flow year over year, hitting $920 million in a single quarter. And what are they doing with all that cash? Passing it right back to shareholders. They returned about $730 million total in Q1 alone, split between dividends and share buybacks. Plus, they reined their leverage ratio right back down to 2.94, which is squarely in their target zone.
All right, Section 3, ESG and workforce metrics. Building a modern workforce.
Looking at the people behind the numbers, we see a really steady evolution in diversity over the last few years. By 2025, minority representation in their total workforce hit 49.7%, so basically right at that halfway mark. We're also seeing a lot of growth with female representation in management and professional roles, with women actually making up over 50% of professional positions in 2025. So they are actively modernizing their corporate structure right alongside their physical infrastructure.
Let's pivot to Section 4, peer comparison and valuation.
Is that premium actually justified?
When you stack WM up against heavyweights like Republic Services and Clean Harbors, the scale of this company is honestly staggering. WM is pulling in $25.4 billion in trailing 12-month revenue, totally dwarfing Republic Services at $16.6 billion. Now, Republic Services does edge them out just slightly on operating margins, 20% versus WM's 18.4%. But because of WM's massive scale, they're generating over $3.2 billion in trailing free cash flow. They are just moving a wildly higher volume of materials through a highly optimized system.
But listen, that kind of market dominance does not come cheap. You are paying a serious premium here. WM is trading at a PE ratio hovering around 33.7, while the sector average is sitting way down at 17.6. So you're paying nearly double the sector multiple to own a piece of this. The market is pricing in a whole lot of future stability and those exact circular economy megatrends we've been discussing. It is a premium stock for a premium position.
Finally, Section 5, Risks and Insider Activity, which you really need to watch. Because even a highly defensive giant like WM faces real, tangible headwinds. A big one analysts are flagging right now is the rising cost of compliance with new environmental regulations surrounding PFAS, those forever chemicals. Upgrading their facilities to handle that is going to take significant capital. Also, while their recycling business is a great story, it completely exposes them to revenue volatility whenever global commodity prices fluctuate. And of course, being a capital-heavy business, they're definitely sensitive to inflation and interest rates.
We also absolutely have to talk about what the insiders are doing. Look at early 2026. CEO James Fish Jr., COO John Morris, and CFO David Reed all executed significant stock sales. Now, executives sell stock for a million different personal financial reasons, right? But when the entire top brass is taking chips off the table while the stock is trading at these massive premium multiples, that is absolutely crucial context you need if you're weighing an entry right now.
So that leaves us with one final major question. WM has successfully figured out how to turn our literal garbage into a cash-printing clean energy engine. It is a brilliant structural moat. But with those sky-high multiples and executives actively selling shares, the market is essentially demanding absolute perfection from them moving forward. What do you guys think? Is that trash-to-cash moat wide enough to justify the steep price tag? Think about it. Thanks so much for tuning into this explainer, and I'll catch you on the next one.